Throughout 2019, US-China trade tension dragged on financial markets as we saw wave after wave of tariffs placed on US imports from China. However, the Phase 1 US economic trade agreement between the US and China that came into effect on February 14 this year, markets have largely ignored heightened tension. As long as the Phase 1 agreement remains in place, the economic implications will be limited. That's the view that has helped the MSCI World Equity Index recover to fresh two-month highs this week to be unchanged versus a year ago. That's despite the White House releasing a report this week asserting that China's Communist Party's expanding use of economic, political and military power to compel acquiescence from nation-states harms vital American interests. With China preparing to impose national security legislation on Hong Kong, tension between Beijing and Washington is surely set to rise further. Eyes should therefore be carefully trained on the upcoming National People's Congress, which convenes today in Beijing. This live event, with 3,000 delegates physically attending, will set the scene for the economic and political agenda through 2020 and into 2021. Here in Australia, it also feels as if relations have soured with China. In the last week or so, China announced 80% tariffs on Australian barley imports, alleging dumping. This followed a partial ban on Australian beef imports and, of course, the Chinese ambassador to Australia's threats to a range of Australian exports. If we assume Australian barley and beef exports to China will be significantly impacted by tariffs and other non-tariff barriers, then we're only talking about 1% of the value of Australian merchandise exports to China. However, press has suggested that other industries might be impacted too, including dairy and wine, and industry sources are noting that Chinese state-owned enterprise buyers have again been directed to go slow on importing Australian thermal coal. Given the current low thermal coal prices and weak demand outside of China, such a move could have an important impact on exports. In addition, Chinese authorities yesterday announced new inspection rules focused on improving the quality of iron ore imports into China. Coming so soon after the barley and beef developments, this has added to supply concerns in the iron ore market, sending the spot prices for 62% iron ore above $97 for the first time since September of last year. Another factor that has been supporting iron ore prices recently has been the explosion in COVID cases in Brazil. Brazil is now the third largest COVID case count globally, according to the Johns Hopkins University. Shipping activity suggests that Brazilian exports for May so far dropped to decade lows on a seasonally adjusted basis. This brings iron ore shipments so far from Brazil this year to be down 13% versus last year, which was hugely impacted by the Brucutu tailings dam catastrophe and down 23% versus the year before. Point being, the seaborne iron ore market is back in significant deficit, and this has also been supporting prices. Given that 20% of China's iron ore comes from Brazil and 60% from Australia, these developments have been a factor supporting the Australian dollar this last week. The Aussie is up 1.5% over the week, including a probe above 66 cents for the first time since early March. However, this move does not fit well with the idea that China's trade threats to Australia could have a major impact. Given that 38% of Australian merchandise exports went to China and 26% of imports came from China in the calendar 2019, markets should be paying more attention to the risks here. Now, next week brings partials for Q1 GDP in Australia, with construction work done released on Wednesday and Q1 private capex investment intentions on Thursday. Preliminary April goods trade balance is also out on Thursday too. Prime Minister Scott Morrison will speak at the National Press Club in Canberra on Tuesday, where he will update on the economy as Australia emerges from the lockdown and will likely face questions from reporters on intensifying diplomatic tensions with our biggest trading partner. And to cap off the focus on China next week, Chinese Premier Li Keqiang will present a speech to close the National People's Congress in Beijing on Thursday. These are all factors we'll talk about in next week's Markets Update.